Hey guys, it's Sunday, July 24th, and the question of the day is, are you ready to trade this wildly crazy earnings season just ahead of us? And so I'm actually going to reveal some crazy stuff in this video. I have a lot of traders ask me, well, Leo, how do you prepare for the earnings season? What do you look at? What is the difference between what you're doing, okay, and between what I am doing? Is the ultimate goal of this video to possibly help you identify some of the areas where you can improve. So instead of possibly locking in a 50% return or 100% return, you could take it up to a 600 or 700% return. Now, this video is solely focused on trading earnings reports. I'm going to reveal the best possible time to enter a trade during the earnings report announcement. I'm going to show you exactly what we do here at 13 Market Moves that makes such a huge difference on the outcome of our trades. How is that some of our traders are able to put together 10, 20, 30x trades while a typical trader is happy when he simply doubles the money. All right, so there's some really important stuff that we focus on, and all of it is on this form. Now, I'll warn you, don't be fucking copying this form, okay? You will get one, and a coach here will help you fill one out. This form is patented by 13 Market Moves because there's just too much proprietary data that goes into this and gives you an exact pathway of how to prepare for earnings, what to do to beat the market. So, as you can see, I've got a bunch of ticker symbols here. The orange ones, those are the companies that will announce earnings ahead of the opening bell. And the blue ones, they're the ones that are going to announce earnings after the market hours. Now, there's a lot more companies than this. They're announcing earnings. It's going to be a crazy week, guys. We also have the Federal Reserve federal rate decision at 2 p.m. this Wednesday. So between earnings and the Federal Reserve, the market is going to be crazy. And this is exactly what you want if you want to make a ton of money trading weekly options. You want the market to be crazy. I can't believe, like, sometimes I hear people, you know, that apparently, I mean, these people just think, well, buy and hold is the best fucking thing to do in the world, guys. Not if you are a weekly options trader. You want the market to be volatile. You want the market to be moving in every possible kind of direction, and you want to be the one to figure out what happens next before it actually happens. So everything I'm going to show you right now is actually going to help you improve your ability to do that. But don't be the guy that sits there and says, oh my God, this market is too volatile, man, I cannot trade it. Stop the bullshit, okay? So without any further ado, understand the basic criteria for selecting some of these ticker symbols, okay? The basic criteria has to be met, such as if it's a stock that we will actually be trading, guys, it's normally going to be over $100 a share. And the reason is you cannot be trading options on stocks that are like $5, $10. The math just doesn't work in most of instances unless something super crazy is happening. For example, you have a biotechnology stock that's a $5 stock that's shooting up to 30 in one top day. I mean, most of these $5, $10 stocks, they're going to move like turtles. And most of the penny stocks that move wildly, you're not going to be able to trade options on them. So a lot of stocks that we wish we could trade utilizing options, they don't have options on them. And so occasionally, once we do identify a low price stock that can move wildly, okay, we will trade it if it has options. But unfortunately, the perfect merchandise is automatically eliminated due to the fact that a lot of these crazy moving stocks, they don't have options on them if they're priced cheap. So the criteria is look at a stock that's $100 or more that has a history of making actually wild moves at earnings. And in order to do that, you would need some basic understanding of how to look at a freaking chart just so you can go back and look. So when people ask me, well, Leo, how do you prepare for the earnings season? Guys, I sit down and I look at a ton of charts, which you would know what to look for if you've taken our charts, diversities, and pattern recognition course. I sit down and I look for a bunch of charts, and this is how I make a list of the stuff. Now, this is the merchandise that I am considering trading. Just because I have something on this list does not mean that I will absolutely trade it. But some ticker symbols here I'm absolutely going to trade them, and some they're just here for observational purposes only. Okay, so for example, I got this Deutsche Bank and Credit Suisse right here in red. I'm not going to be touching these things, okay? But I'm going to be watching to see what these companies actually say during their earnings report, as they could be the overall guide. What's the outlook for European economy? What are these banks thinking? What's on their mind? I want to pick their brain a little bit, and the way they're going to present the information during the earnings call could be giving me some insight on some things, okay? But also understanding how does that information match to how these stocks are actually going to respond during the trading session. Being able to put that information together could tell me whether this nice move higher in the banking stocks during the first week of the earnings season, which was last week, okay, how it could correlate to some of the things that could be transpiring this week. And last week we've identified, guys, the most simple move to trade last week was a move 4, when things are actually dropping, and then guess what? They're buying the dip. Move 4 is a buy the dip type move. All the banking stocks that started announcing earnings early in the week, they tank, and then they pick themselves up, and now within just a matter of a few days, okay, they're at astonishing levels in relation to where they were last Monday. So with that, let me explain a couple of things that we keep track of. So you got to have some historic relevance. Basically, you got to look at the context, okay? So if you were working with a coach here, guys, you would have known some simple things that we keep track of here every earnings season, guys. So we got some data on some of these stocks that nobody else has based off our methodology here at 13 Market Moves. So for example, if a particular stocks reports earnings, okay, and it has a, out of the last 10 quarters, the stock makes a move 7 out of last 8 quarters. If the stock makes a move 7 like 8 times, guys, that's an 80% probability that the stock is going to make another move 7. All right, so clearly you don't want to be a bear in this case, in this particular circumstance. So, but the most relevant information you could be looking at is how did a stock perform? What move between move 1 and move 13 did the stock actually make during last earnings season? So that's the information, okay, that you would be able to get filled out right here. And it would carry over to the next earnings season. And after doing that for a little while, you would have this insane data, which would allow you to just look at probabilities. And on some stocks, these probabilities are going to be insane, and on some of them, they're not. Besides the fact that some of these stocks are over $100, because we don't want to be trading the turtle that doesn't move, right? We want, if the reaction and the size of the move is not what the market participant expects, we want the stock to be swinging wildly in either direction. It doesn't really matter. We just want to understand what that reaction could be from the standpoint of probabilities. So the reason for picking this $100 plus per share stock price, because those are the ones that could be moving, 10%. So say a $100 stock could drop to 90, it could go to 110. So we're targeting a move, let's say, of about $10. And then we're going to want to go back and verify that historically a stock has actually done that. All right. And we'll collect that data and we'll fill it out in the last quarter. How much was the move in numeric terms, like for CMG? How much was what was the actual move last quarter? Was it a green move? Was it a red move? How did it evolve? Was it a super bullish move like a move 1 or 7, or was it a lesser bullish move like a move 4? So we're going to understand that before we're going into D0 right here. D0 right here. Hopefully you guys zooming in so you can see it a little bit bigger. Okay, move D0. What goes into this spot right here is how does the stock initially respond to the earnings report. Okay, that stuff right here, guys, is incredibly important because it keeps track of the initial reaction of the stock. So in case of CMG, when it reports Tuesday after hours, we're going to be recording here exactly what was the initial reaction. What move was the initial reaction? So whether it's going to be 405 or 430 when that earnings report come out, we're going to be recording the move. It's going to be the move between 1 and 13, guys. And if you understand the 13 market moves, guys, it shouldn't be an issue for you to just type in the number on this form, right? And then the next day, we're going to see what the stock is going to do, what move is actually going to make during the regular trading session. We're going to record that number right here. And what is the follow-through reaction going to be on the next day? Now, not only we're going to do that, we're going to record the size of the initial move, the size of the move on day one after earnings, and the size of the move in day two after earnings. So we're going to collect all this crazy data right here. It's going to give us an insane insight on what to do with CMG for the next quarter, what to do with CMG during day 0, day 1, and day 2. So all of these is just going to be numbers, guys. After we're done with this form by the end of this week, it's just going to be filled with numbers. They're all going to be numbers between 1 and 13 filled out in the spots, and they're going to be numbers as far as the DTR is going to be the daily trading range, which is actually going to be the number by how much the stock has moved on a given day. Plus $7, minus 33. So you're going to see all kinds of numbers up here. And so this data is going to position you, if you fill that stuff actually on your own, this data is going to position you to have a huge edge over any other trader because you're focusing on a set of numbers. The set of numbers allows you to cut through for all the noise around the earnings reports, right? And so most of the traders, they want to get in ahead of the earnings report because they think, well, if something drops a lot, or if something goes higher a lot, I can make a lot of money. Well, that's actually not the case. Because again, the way you make money during the earnings reports is the earnings report has to have an element of surprise. So in other words, if the stock is at $100 and it drops $7 to 93, and maybe you were expecting that because you saw, well, a lot of people were buying these 95 strike puts. So you're not the only one doing it. And maybe when you look in the option chain, it shows you, well, the market expects about a 7% move lower or higher. And so if you buy a 95 strike put on a $100 stock and the market already expected it to make that 7-point drop, guess what? You're actually going to lose money on your 95 strike put. Okay, chances, the best case, you may be able to break even. Ahead of their earnings report, they're going to carry insane premiums because everybody's expecting a big move. But if the move happens that I'm talking here about the size of the move. So if all the market participants were expecting the stock to drop by $7, and that's indeed what happens, even though you basically estimated that the move was going to be to the downside and you got that part correctly, you're still not making money. You're still likely losing a little bit of money because the next day the option premium is going to be completely wiped out, and chances are that option, because there was no element of surprise. Everybody already knew, hey, there was a good chance that it was going to drop by 7. Now, the only way to make money in a scenario like that, if you have a really solid case for believing that the stock could actually move by $13 instead of 7, or the stock could drop by 20 instead of 7. So buying options ahead of the earnings report only makes sense if maybe you spot, we look for a ton of charts. I actually got 3 stocks here that I believe are going to make insane moves, and we will trade those ahead of earnings. But the rest of them, I don't want to touch at all because statistically speaking, your best entry is going to be on the next day after the earnings report because you're going to know the size of the initial reaction. You're going to be able to combine that information with what happened in the prior few quarters in the reports. Okay, and the size of the move, guys, here, that's the key. The size of the move is what's going to help you select the correct strike price, okay? So studying the historic movements in the stocks by how much they're going up or higher, lower, that's going to make a huge difference in your ability to select a great strike price. But if you're just showing up to the market in the morning, you're like, oh my God, things are going lower, things are going higher, and you have no idea by how much of a move you're going to get, You're going to be tempted to buy strikes that are out of the money because sometimes the stock is going to look like, oh my God, look, everybody's buying it. It's green, let me get in. And you buy it and you lose money. The stock still ends up higher for the day, but because you're looking at all these green candles on your screen, you'll have a tendency to buy an out-of-the-money call. And if the stock stalls and begins to go sideways, that's going to be a losing trade. So filling all this stuff out, guys, is what gives us a competitive edge here at 13 Market Moves. And understand that every day, as you can see, this week we've got various sectors. We've got some technology stocks. We've got some restaurant stocks. We've got some travel stocks. We've got some parts companies like O'Reilly. We've got oil-related stuff like Chevron and Phillips 66. We've got industrials all over the place right here on Thursday. I mean, we've got a ton of different sectors that are reporting earnings. The ultimate goal is to understand what is going to be the predominant move across multiple sectors. Okay, and there's going to be, during the day, it could be certain sectors that are going to get hit hard during maybe a couple of companies in the same sector miss the earnings and the reaction is negative, or they beat the earnings but they're selling the whole sector anyway. Okay, we want to estimate which sectors are bullish, which sectors are bearish, so we're going to be filling that out every day throughout this process. Okay, but more importantly is, if you do that daily, you're not just listening to the news, you're not just listening to, all these opinions. I mean, you're focusing on the numbers. You want to beat the market, you want to focus on the numbers, guys. So study the 13 market moves, understand all the moves and their criteria between move 1 and move 13. Fill out this form, okay? First, go for a ton of companies that are reporting earnings. And I'm going to show you real quick an example, like how you would actually, I mean, most of the people trade Netflix, right? But how would you actually determine, so this is an easy example. Let's say there's 50 companies reporting earnings tomorrow, which actually there's a lot more, but you're trying to identify which ones you would be interested in trading. What you want to be focusing on is pulling up like a daily chart. A daily chart here on Netflix shows you what? Well, last time Netflix had a huge move, right? It was from $350, it drops all the way down to $225. I mean, that's over 100-point move in Netflix during last quarter. But that wouldn't have been even enough information for you to be trading this earnings report, right, which was right here. But that does give you an idea. Hey, this stock can move. So let's say we weren't talking about Netflix and you were going for a list of companies that were reporting earnings and you're trying to put them on a daily chart. So if you see something like this that tells you, hey, a stock indeed can make an outsized move during the earnings report. Now, the way we traded Netflix last week, all right, is we actually understood the data not just during the last quarter move, but clearly we've been collecting data on Netflix for years. And so based off historic context of this move, anytime Netflix has dropped 2 quarters in a row, so now if you look at a weekly chart, you would also have seen that Netflix had prior quarter, Netflix also had a drop. So it's been going in a downward spiral for quite some time. So if you just look at the context of this move, maybe you might have been, let's say you're a new trader and you're like, well, I traded Netflix puts last time and it worked out great. Well, we traded them last time. Last time we traded Netflix on the put side, and that was a beautiful, phenomenal trade, right? So we bought puts ahead of the earnings on Netflix actually last time. This time, I'm going to show you what we've done, and it was based on entirely, different set of circumstances. We actually told you that based on the historic analog that we follow, based on all the data we have, okay, we were going with Netflix calls. So if you're new and maybe you remember how Netflix dropped last time, you're like, wow, I can't wait till Netflix reports earnings again. I'm going to buy puts again. It's going to drop another $100. Good luck with that strategy. Understand this. If a stock makes a significant move more than 1 quarter, the probability of it making another huge move in the same direction is just not going to be there. So we actually told you, right, the size of the move. We said, look, we could get a nice 20-point move higher in Netflix after hours. Now, notice that was the message I sent in the alert group, like in the morning still, 9:34 a.m. And basically said, look, if that happens, all the tech stocks are going to pick up. And they did pick up for a few days, right, until we had a snap disaster that hit the market on Friday. Now, I also sent the message saying that we have an 80% probability of Netflix bullish move after earnings, which would be exactly the opposite of total bear overreaction and destruction of the stock in the last 2 quarters. So understand that we're just looking at this quarter, this huge move. We were looking at a quarter prior and the quarter prior, and basically the probability that it was going to make another move lower, it was just not here. It was not here based off what we track with our 13 market moves earnings calendar. The probability of upside was 80%, and we got exactly about a 20-point move higher. And notice that we've said that if it does initial move high like that, it is likely to go higher for 2 or 3 days, and as well as some of the other technology stocks. So that's exactly what happens, right? It reports, boom, higher, 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 4 days in a row, with the exception of Friday. So understanding the context is, well, when you pull up a chart, can the stock make a big move? Does it have a history of making big moves, right? Because, look, not every $100 stock is going to move by $10, $20. Not every $350 stock is going to drop 100 points. Some $350 stocks could only move during earnings like $5. So that information is important, because if you're selecting another stock, let's say it's $350, which is where Netflix dropped from here, right? I mean, and you're buying puts, let's say 300 strike put, because you think, well, it's another $350 stock. Sure enough, what if it drops like Netflix? I'm going to go buy 300 strike put, and I'm going to sell them in case it drops to 250. Well, you can't just go ahead and blindly buy this $300 strike if the stock never has a history of actually doing it before. Unless, okay, there's some crazy stuff that in times will point on a chart pattern. When you focus on multiple time frame charts, it could show you that no, even though it has never done it, the time could be right for it to do it. Okay, so basically in the selection criteria, all the stocks that you see here, predominantly they're here for a reason, because they have a history of being able to make outsized moves during earnings report. They have a history also of reversing the initial reaction in the opposite direction the next day. And that is the kind of stuff that most of the traders don't even look at, because they blindly just go, oh my God, the earnings are good, it must be going higher, let me buy some calls. Bullshit. Good luck with that strategy. I know exactly where your size of your account is at if you're doing that. It can't be much, because if you buy calls every time you see something goes higher, I guarantee you're losing 95% of your trades. So, guys, if you trade based off the data, if you'll study the 13 market moves, if you do your due diligence, if you pick out the right type of product. Now, not every stock here we're actually going to trade, clearly. We're not going to trade every single one of them. But some stocks are here, like MasterCard, just to get a reading, just to get a reaction, okay? LII, we may not trade that, but it's related to real estate, okay? CVX, we may or may not trade that, but it's related to oil. So I want to have data on all this. Humana, I want to have the data on all of these different sectors, and I want to have the data on their reactions. Like, what would be important, for example, is for me to get the data right here filled out on McDonald's, which reports earnings on Tuesday morning, before I will be potentially putting a trade on CMG. The reaction to the McDonald's report are going to impact CMG trading during the day. And guys, if you're wondering exactly how we're going to trade CMG, I actually got a solid plan for a killer trade. This is going to be a minimum of a 5x trade on CMG. Make sure you click the link below this video. You go to 13marketmoves.com, schedule a coaching call with a senior trader here at 13 Market Moves, guys. The selection criteria, guys, is very, very important. So these stocks are here for a reason. As you can see, I don't have every stock that's reporting earnings. I handpick these stocks myself. I do it every week during the earnings report. And if you trade with me and I'm your coach, you will know exactly the favorite stocks that I'm looking at, the favorite stocks that I'm trading. You will know which ones we're shooting for a 5x top trade, which ones we're shooting possibly for a 20x trade. Because all of this stuff, all of this homework that I do is what allows me, focusing on these numbers, focusing on these data, allows me to really nail some of these killer trades. And so, opposed to somebody that just, hears something in the news, wow, the earnings were good, it must be going higher. Oh shit, why is it dropping? Okay, so you don't have situations like this. The only way to do that is to focus on the data, that is numerical data. And the reason why we focus so much on the size of the move, guys, because it allows you, in majority of the cases, to select the right strike price. So, for example, I've given you this Netflix. I've shown you exactly that we knew not to go crazy. We weren't expecting a 100-point move higher on Netflix, but we knew it was going to bounce roughly $20 higher after the earnings report, and that's what happened. If you were a new trader, remembering how Netflix crashed last quarter, you were probably like, no, let me show it's going to drop more. And so you got to do a lot more homework before you're going to put on a trade like this. There's a lot of traders that focus actually in the news, opposed to focusing on the probability of the reaction that the stock has had historically. All right, and the same thing for Tesla. We went after the Tesla the next day. We went heavy on calls on Tesla, and that trade, guys, it wasn't a crazy trade because even the day after the earnings, Tesla calls were highly overpriced. It was only about a 3x trade, about 300% trade on Tesla. But here's an example of the stock that I'm like 99% chance I'm not going to trade it. But there's some signs that this stock could actually make options are cheap on it because, as you can see, it doesn't trade. It doesn't make any wild moves. As you can see, last time, it didn't make basically any moves at earnings. Basically a stalemate right here. Didn't really move higher, didn't move. It was just within a couple of bucks. So this is an example of a stock you would not want to trade, but I think there is a chance this one could make an outsized move. And because of how options are priced, this could be an easy trade. But this stock is not going to make you a 5x or 20x type trade. All right. But this chart looks interesting. The pattern looks interesting. There's a lot of stuff here I don't have time to cover that look interesting about the setup. And this is why this stock is on this list. And also for the fact that there's not a whole lot of merchandise tomorrow morning, Monday, that we're excited about. The real fun days are Tuesday, Wednesday, Thursday, even Friday, guys. Most of the companies, they don't report earnings on Friday. Certainly none of the companies report earnings on Friday after hours. But during the biggest earnings weeks, you will see some companies that will report earnings on Friday. And there's some good ones. There's some good ones. This stock right here is only $1,000. Very interesting. The unfortunate part, it doesn't trade weekly options, only monthly. Granger, that's a stock that we've made money during earnings calls again and again and again. This is a stock that has high probability of making a reversal after the initial reaction. This is a beauty right here. And a lot of people don't even trade it. They don't know about it because they go for stuff like, Roku or something, or Amazon. But there's a lot of unknown stocks here, probably here to you, but we've got a trading plan this week for trading each one of these things dependent on the statistical data that we have gathered in the past using 13 Market Moves methodology. And this is why our trades produce more. This is why we're able to land 6, 7x, 20, 30x type trades on certain occasions. It's not going to happen on everything, every single stock here. But because of the amount of homework that we do here, guys, at 13 Market Moves, we're just better prepared than most of the traders out there. And that's why we're able to perform on an entirely higher level than any other guys. There's a bunch of knockoffs of 13 market moves out there, guys. You should know that the only way, okay, the only way you will actually trade with a real 13 market moves coach, not a bunch of knockoffs out there, if you will go to 13marketmoves.com or 13mmtv.com. Guys, there's like people got a bunch of knockoffs of me using our logos. There's people that may even call you on your phone, inviting you to join groups saying, but yeah, master the 13 market moves, guys. Make sure you're paying close attention. If you're purchasing courses, make sure you're buying it through us at 13mmtv.com. A sure way is you want to actually go to 13 market moves, schedule a call, talk to a coach here before you do anything, before you select any courses. But if you were curious, all the stuff that I just shown you, where to learn more about it, you would actually want to acquire a Trade Like a Rockstar course that focuses specifically on trading earnings. And guys, just to give you a quick summary of what I really meant to talk about in this video is, number one, the way I prepare to trade earnings. I make a list of stocks that report earnings that have high DTR, meaning DTR, daily trading range. You want the stock that is moving. Not every $100 stock is going to move. You want to look at stocks that could catch the market by surprise. So you want to look normally at a chart pattern to assist you with that. So charts diversity course and pattern recognition will definitely help you with that. All right, focus on the context. Okay, look at what the stock has done historically. What was the last move? Was it a move 3? Okay, well, it was a huge move 3 on Netflix, but this quarter we've identified was actually going to make a bullish move. Okay, so sometimes if a stock makes a consecutive history of a couple of quarters and just completely gets destroyed, going into the third quarter, you don't necessarily want to be overly bearish. Okay, oftentimes you want to take the opposite side of the equation because the expectations at that point has been lowered for the stock by so much it can miss earnings and it can still go higher. Look at Tesla. It missed earnings and it still went higher, right? So understand the context, study the chart, understand what were the previous daily trading ranges after the stock reported earnings. That's going to help you select the right strike prices so you're not just sitting there blindly thinking, oh my God, I knew it was going to go higher. Why am I not making any money? Well, it's because you bought your strikes are way out of the fucking money. That's why you're not making any money. All right. Now, there are going to be instances where you want to go way out of the money because that's going to create the biggest return top opportunities for you, but you got to know when to do it. And in order to identify those opportunities, guys, you got to be able to do a ton of homework. And if you're not willing to do all this homework, guys, that's why you can call and trade with a coach who's going to hold your hand and explain you all this stuff and show you how this stuff works. So log daily moves for 3 days. So during the earnings report, like in the case of CMG, right, you want to pay attention exactly what the stock does after hours. You want to pay attention exactly what the stock does the next day. And sometimes you're going to hold off. You're not even going to trade it before earnings. You're not going to trade it the next day after earnings report. You're going to trade it on the third day because by that time, options don't carry significant premium. And by that time, it is very clear which direction the stock is headed. So observe predominant move for the day and the week across all sectors. So just keeping that information in check. If you have multiple sectors reporting earnings and all of them are dipping and then going higher, and it's not just one sector, well, guys, then it tells you institutions are buying the market. So stop shorting the market if you see this sort of behavior. If you see it on one day and it changes the next day, it's another thing. But if the entire week, goes by like what we've seen last week with the banking sector, they're buying the dip, buying the dip, buying the dip. Like, no, don't short those type of situations. And so just filling this out, understanding what the predominant move is for the day, and really summarizing it by the end of the week, what the predominant move is, utilizing the simple form, guys, it's going to help you tremendously. After doing all that, guys, just focus on a sequence and pattern to enter and exit. And if you don't know how to do that, again, we're here to help you out. Sign up at 13marketmoves.com. Take Trade Like a Rockstar course if you haven't done it already. And let's rock one of the busiest trading weeks this summer, guys. I hope you're ready. And if you're not, it's not too late. The real action is going to start on Tuesday. You have plenty of time to sign up so you can take your 25K account to $1 million in the next 60 days with 13 Market Moves. I hope you're ready for a challenge. I will say one thing. Get rid of your fear. Get rid of your fear, guys. I see too many traders fail that are fearful. And the number one reason you should be signing up with 13 Market Moves is the psychological aspect of trading with a coach who will help you deal with your fear of losses, or your fear of losing profits once you're actually in the green. All of these fears and not dealing with them properly is what's killing your trading account. So come to 13 Market Moves with an open mind. Get out of your comfort zone, damn it, and be ready to take your trading account to the next level. I'll see you guys in the next video soon. Let's rock.